Are you ready to capture the biggest earnings moves in the market next week? Well, I've got two explosive stock option trades that are beneficial both in the short term and the long term. And I'm going to reveal exactly why Wall Street has this on their radar and it's the center of their attention. We will walk through together the best high potential option strategy to maximize profits. Before we get started, be sure and hit like and subscribe down below. Download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research, and if you're learning or a beginner, start small. All right, let's do a deep dive into this AI powerhouse. And this stock's on sale right now. NVIDIA stands at the center of the AI accelerated computing revolution, commanding an overwhelming share of the AI GPU and data center markets. With its cutting-edge Blackwell processor and a platform approach that integrates hardware, software, and networking, NVIDIA is the backbone of the AI boom, powering everything from generative AI to cloud computing for the world's largest tech companies. In fact, NVIDIA owns a dominant 92% of the GPU market, and its AI chips are the preferred choice for both the cloud providers as well as the government agencies. So all eyes are on NVIDIA's upcoming earnings this week. Especially after a year of explosive growth, fiscal 2025 revenues soared to $130.5 billion, up 114% year over year, with data center sales representing most of it. While the stock has seen volatility, including a recent 20% pullback amid export restrictions and tariff concerns, these dips have historically presented buying opportunities for long-term investors. Technical traders are closely watching support and resistance levels as the next earnings report could be a major catalyst. Looking long-term, NVIDIA's leadership in AI, its financial strength, and relentless innovation make it a core holding going forward despite market swings. The company is projected to potentially reach a $5 trillion valuation within 3 years, driven by its dominance in AI chips, deep partnerships with leading foundries like TSMC, and its ability to capture a significant share of the growing GPU and data center markets. Even as competition intensifies and export restrictions impact certain regions, NVIDIA's scale, platform strategy, and continued demand for accelerated computing position it for further growth. For investors, recent market concerns such as tariffs may actually present strategic entry points into a company that continues to shape the future of technology. I'll show you the trade I'm doing on the option trading platform. All right, guys, real quick, before we jump on the option trading platform, let's look at Yahoo Finance and NVIDIA. This is the summary page for NVIDIA. It's trading at 131 right now. You can see the 52-week range is from 86 to 153. So I like that 153 high end. So that gives us, another $22 to reach where it was at previously. So there's room. And I always liked that when doing a leaps option or selling a poor man's covered call, buying a poor man's covered call, selling the call against it. The 1 year target that they have is 162. Mine's actually much higher than that. It's going to be well over 200 in my opinion. Let me know in the comments below what you think. The earnings date is next week, May 28th. So when is that? Today is Sunday. So Wednesday the 28th after the bell. So we want to put this on. Actually, I'm putting it on. I already have it on, but you can put it on any time before that. But definitely have it on by the 28th in the morning. But I think there's going to be a big move up even prior to the 28th, early in the week, because I think everybody's anticipating a good earnings. But again, we shall see. So put that on at least before the 28th. And the 1 year target, mine's much higher. Now let's look here at the previous earnings. They beat the last 3 times. You can see revenue and earnings growth moving up going forward. All the strong buys by the analyst. Growth estimates, unbelievable, 36% next year. And with the different chips, the Blackwell that they've got coming out. I think they're going to smash this. The current year is 38%. And here's an article by the Motley Fool. Should you buy before the 28th? And Wall Street has an answer. Let's see what they say. Actually, I already know, but I wanted to point it out right here, some of the things that I highlighted. NVIDIA has spent about two decades building its CUDA software platform, which now includes hundreds of code libraries, frameworks, and pre-trained models that help developers build AI applications across a broad range of domains. That includes video analytics, speech recognition, recommendation engines, and customer service agents. The company is well positioned to maintain its leadership through the next phase of the AI revolution: self-driving cars and autonomous robots. Physical AI and robotics will bring about the next industrial revolution, and I totally believe that, and NVIDIA's super well positioned. Jensen Huang, their CEO, says we build technology that almost every self-driving car company uses. That includes Alphabet, Waymo, and Tesla. Similarly, Amazon uses NVIDIA Isaac to train, simulate, and manage its warehouse robots. So they're partnered with some great companies. So let's get onto the trade. We can see right here, NVIDIA. This is the Tasty Trade option trading platform. There's a link down below. Great platform. Check it out. There's some benefits if you go through my link. So I'm going to go out for leaps. I like the March. I like to go out about a year, but I'm going to go to the 299 March 2026 chain. And then I'm going to go deep in the money. So I'm going to go to the 66 delta right here, and calls are on the left, and here's the buy, here's the sell. We're going to buy. So we want to click on the 120, which is the 66 delta. So this gives you a 66% replication of owning 100 shares of stock. So the stock moves up $1. This option will move up 66 cents. Let me know in the comments if you have any questions about that. But I like to go around the 65 or 70 delta when I'm doing when I'm buying leaps options. So we can go to the mid price right here. I like this on the Tasty Trade platform. It tells you right what that is, and you see it as pretty liquid, 15-cent wide on a $3,000. So one option contract controls 100 shares of stock. So $30 and 20 cents. Sorry about that. I'm dying. Is really $3,020, but to buy this contract. However, if you were to buy 100 shares of stock, it would be $131.29. So $13,129. So wow, much less. $3,000 versus $13,000. Yeah, I'll go with the three. But this is the leaps. And if you go to curve mode, love this about the platform. And then we hit analysis. You can see right here as we move forward, once we recoup this investment and we get up in this 150 range, and again, Yahoo has the target range, I think it was 160. I think it's going to be 200. It just moves up exponentially, and it moves up like owning the shares of stock. So you can see if we get up to this 170, at 170, we've got $2,000 profit going forward. So that's the leaps. Now we're going to go back to the table mode. So in addition, I'm sorry, guys, to the leaps, I'll sell a call against it. I'll go 26 days out. I'm not going to go right around earnings because this is a long-term core position for me. I'm going to open up that June, and then I'm going to go out here. We're going to look at the calls, and we're going to sell this time. I'm going to collect around $400. So we can go all the way to the 140 and collect $395. We'll click on the sell this time. That's the 35 delta. So there's a 65, it's 1 minus 35% chance that it won't move up this far, 140, and it will stay in that range. Now this brings down the cost to $26.25. So we immediately collect that $400, that $395, and it brings down the cost from $3,000 to $26.25. So $2,625. We can do this every month and collect $400. If we collect $400 a month and continue to do this, if we collected $400 just like this, we would pay off this $2,600 in less than 6 months. So 6 times 4 is 24, 7 months, if I'm doing my numbers right. But from here, you hit review and send there and place the trade. Guys, Marvell Technologies is one of the most undervalued growth plays right now. Marvell is emerging as a critical player in the data infrastructure and AI semiconductor space. The company's expertise spans custom AI silicon, high-speed networking, and cutting-edge data center solutions. In 2025, Marvell showcased the industry's first 400 gig PAM4 electrical to optical link technology, a breakthrough that enables cloud data centers to dramatically boost bandwidth and efficiency. Marvell's aggressive push into AI-optimized networking, memory pooling, and next-gen chip manufacturing positions it to capture sustained growth as hyperscalers and cloud providers continue to invest heavily in AI infrastructure. All right, guys, for Marvell Technology, if we look at the 52-week range, it's 47 to 127. It's trading at less than half that right now at $60. Incredible buy right now. You can see the 1-year target that they've got is $97, so a third of the way higher. It's a huge upside potential for Marvell, and the earnings date is May 29th, so that is Thursday after the bell. And if we look at the forward PE, it's 22, very low in comparison to previous numbers, and the PEG ratio is 1.5. Anything under 2 is fantastic. And look at that, 3 earnings beats the last 3 quarters, strong buy and buy ratings by the analyst. And look at this growth estimates, 155% for the current quarter. I mean, why is this stock where it's at right now? I don't know. You guys let me know. What is it? Let me know in the comments below. Really appreciate those comments too. That helps get the video out. Now, next quarter, 121% what? Current year, 77%. So there's big for this next quarter target of 127%. But hey, we'll see where it comes in at. But again, this is not only a chance in the short term. We've got a leaps. We're utilizing the leaps because even if there's a pullback, we make money on the call that we're selling against it. And long term, we want to hold it. So I want that. I'm not going to sell the leaps or close it out anyway. Next year, revenue target, revenue growth projections of 28%. So that's huge. So let's go back to the Tasty Trade platform. We're on the trade page. These are the different option chains. Again, I'm going to go out to March. Let's open that up. We're going to go on the left for the calls. We're going to go buy right here. And I'm going to go to the 68 delta, the 55, and we're going to click on that to buy it for $16.45. So how much is that? That's 100 shares of stock that it controls, one contract. So it's really $1,630 that we're paying for that. But if we were to buy 100 shares, it would be $6,000 or $6,069. So what is that? 20%. It's much less to do it this way and control the same 100 shares. So we're going to close that up, and then we're going to sell a call against it. So we're going to open up the June. These are the regular monthly option chains, and I'm going to go down. I'm going to collect about $250, and this is the 35 delta. So that's a 65% chance, 1 minus 35, that it will stay below that 67 by this June 20th date. And this is only 26 days out, guys. So there'll be a volatility crush after earnings are announced after the bell on Thursday, and we'll hopefully make a lot of money together. But watch this. When I sell this 67, watch the $250 that we're going to collect be subtracted from this 1630. So right here, and now we're at $1,360. So for $1,360, that's what it's going to take. We just hit review and send and place this trade. I've already got this trade on, but review and send and place the trade for $1,360. If we collected $250 a month every month, since it's a long-term core position for me, I'm going to continue to sell calls, and any down move, I'll close out the calls and hang on to my leaps. But $250 a month is going to pay that thing off in about 6 months. So that's the trade that I'm doing. So in my opinion, NVIDIA and Marvell Technologies are two of the best short-term and long-term option trades right now. They're not really trades, they're core positions for me. And they're both going to benefit from the ongoing innovation in AI and technology and the global demand. The poor man's covered call is the ideal strategy to maximize profits and limit risk because you've got lower upfront cost, and we can profit in both directions on any pullbacks, but with the short-term call and collecting that monthly premium. All right, guys, remember to hit like and subscribe. Download the free options workshop in the link below. Leave a comment, ask a question. I answer everyone. Let me know, are you trading Marvell Technologies and NVIDIA? If not, why not? And what are you trading? Thanks for watching. I'll see you in the next video.